a peep into the markets beginning 30th August 2021. The denial of special drawing rights by IMF to Afghanistan was a matter of interest last week. The same IMF this week has made available enhanced special drawing rights to all member countries in an oblique attempt at global quantitative easing. The US and the United Kingdom will be the major beneficiaries of this move. But the benchmark US 10-year Treasury bond yield has firmed to 1.34%, while the NASDAQ 100 was seen well supported at 15,280 levels. Gold has inched closer towards $1,800 per ounce, and Brent crude has also firmed up to $71 per barrel from last week's closing of $5. Amidst this, on Friday, Indian rupee staged a steep appreciation against the dollar and closed at 73.70. This is a nearly 1% jump over last week's closing. However, with FIIs turning to be net sellers in the equity markets and having sold close to 7,652 crores during the month thus far, it might be prudent to assume that in the coming week, rupee could trend towards 74 levels against the dollar. The Kotak Mahindra Asset Management Company came under poor light, attracting a fine of rupees 50 lakhs from SEBI for inappropriate rollover of zero coupon NCDs held in one of their fixed maturity plans. Such ingenuous engineering in accounting could be detrimental, and the investors need to be wary of such practices. The Nifty was well supported at 16,705, and the derivatives index VIX was also softer at 13.41. The government's big number in the asset monetization plan appears to be seen with circumspection by the markets, as similar plans ended up in a higher cost to the consumers elsewhere in Australia. Whether the government will bring in or build adequate safeguards to ensure that the end user cost remains under check and adequate cash flows are flowed back for asset maintenance and upgradation will be the moot point. The benchmark 10-year bond yield was firm at 6.25%, while the 3-year IRS rates marginally hardened by 3 basis points from last week to 4.70%. South Korea has set the global rising in interest rate cycle with a 25 basis points hike in the policy rates. By next week, the markets will be repositioning to the outcome of the deliberations in the Jackson Hole Economic Policy Symposium scheduled over the weekend. Have a rewarding week ahead.